Happy Monday, traders. Good morning. It's 8 a.m. Chicago time, 9 a.m. Eastern on the 6th of March, 2017. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market position this morning is out of equities, but not by much. The market's really mixed. The worst performer so far in the futures that I watch is the Russell, down 7.1 points. The market opened and dropped quickly overnight, has been holding steady at the lows. Um, Followed by the Euro stocks. There's news out of Greece that they have. Let me see what it was. Greece's economy shrank by 1.2% in the fourth quarter of 2016, according to the latest data from the country's statistical service, Elstat. That was worse than the previous estimate of a 0.4% contraction. We're seeing the DAX and the Euro stocks lagging. We're seeing money going into gold, trading at $1,233.20, up 6.6. 54 basis points, followed by the Japanese yen, the Eurobond, the Treasury bond, and a 10-year note. So flight to safety this morning. The Euro FX is just under even for the session. Other than that, news flow, not too much. Um, the Chinese government has reduced its projection. Um, It sets the 2017 GDP target of around 6.5% or higher if possible versus 6.5 to 7 in 2016. Maintains CPI target at about 3%, same as last year. Also, China is to cut steel capacity by another 50 million tons and coal output by over 150 million tons in 2017. I'm sure the environment will be happy to hear that. Other than that, uh, at 6:17 a.m. Chicago time this morning, the ECB says it's unlikely to increase its asset buying scheme, its QE program, or lending at its March policy meeting. The meeting is on Thursday, March 9th. One of the things I want to remind you of before we move on is that rollover is this Thursday. Official rollover on the U.S. indices is March 9th at 8:30 Central, 9:30 Eastern. That's when I'll flip to the June contract. The June contract is M7 or M17 in whatever product you're trading. Expiration or quad witching Friday is March 17th. We roll a week and a day before that. Traditionally, the volume is not likely to move over into the June contract until March 10th. I switch with the exchange generally because I just like to stick to a schedule, but also my data feed rolls with the exchange as well, even though the volume is not really there. So things to note when we have rollover. One key thing is that your volume profile for that day is not going to be highly representative of what the market action is. And also your delta, your volume delta is going to be way off. And the volume delta is likely to be way off over the next week and a half to 2 weeks until expiration. Actually, it's not going to be off until about Wednesday, this Wednesday, for about a week and a half. You have to kind of take those fills with a grain of salt. Remember, everybody who's in the March contract in U.S. indices has to move to the July contract, and that involves a calendar spread, which means they're either buying or selling one and buying or selling the opposite in the other, and that affects how we look at volume and execution. Okay. As far as news flow, it is Monday, and we normally look at the week. Uh, Let's start with today. Today we have durable goods orders at 10 a.m. Eastern for January, expecting 1.0%. At the same time, we get factory orders at 1.0%. As far as speakers, at 3 o'clock, we get Fed Speaker Kashkari. Tomorrow, we get German factory orders at 2 Eastern a.m. And then we get GDP out of Europe at 5 a.m. Eastern. Trade balance at 7:30 a.m. U.S. trade balance at 8:30 a.m. Eastern time for January, expecting 54.7. Then we get consumer credit at 3. No real speakers tomorrow. Wednesday, we're looking for ADP. Remember, last Friday was the first Friday of the month, but we didn't have non-farm payrolls and unemployment. But this week we get ADP on Wednesday, which is kind of which is expected to be kind of a preview of what the non-farm payrolls would show. I'd say that that relationship is not so consistent. At 8:50 a.m. on Wednesday, expecting 177.5 for February, and then at the same time, we get non-farm productivity, unit labor costs at about 7:30, 10 a.m. wholesale inventories for January, crude oil inventories on Wednesday, and then no speakers Thursday. We get CPI out of China at 8:30 on Wednesday night, and then at 7:45 on Thursday, we get the ECB announcement. Um, we get the ECB announcement and on the deposit facility rate, as well as the 7:30 a.m. Press conference by Draghi. Although I don't see it on the schedule, I'm surprised they would have the announcement on rates, but no presser. Um, Thursday also we get to U.S. import prices at 7:30 a.m. Friday, we get numbers out of Germany early on at 2 a.m. Eastern. We get numbers out of the UK at 4, a slew of numbers out of the UK at 4:30 Eastern, industrial production, visible trade, manufacturing production, construction output, and the GfK inflation all come out of the UK at 4:30 at the same time. And then of course Friday's a big day. It's at 8:30 Eastern. We get the non-farm payrolls. The expectation right now is 174 for the headline number, unemployment at 4.7% for February, and then we get the monthly budget statement at 2. That's a preview for the week. So as far as we're concerned, today we get some key numbers, and then it's fairly quiet till about Wednesday. And then Thursday we get the ECB, and Friday we get non-farm payrolls. So the economic calendar is distributed throughout the week. Now let's move on and look at what we expected on Friday versus what we got. This is the primary hypothesis on Friday, and no, we're not doing 1080p this morning. We don't have high definition this morning. The goal just for today is to keep the bandwidth low so that you have a consistent feed, no buffering, and so far so good. But normally I'd go back to 1080. So stop struggling with making it what it isn't. Um, the primary hypothesis on Friday, because we were opening around 2379.50 or so, uh, right on the edge of the 2-day balance in the gap zone. The expectation on Friday was that it's likely to tap against the prior day's range, test lower, find its buyers in the gap zone, and then start turning up. So the main play on Friday was to look for a low to lean against after it drops, and then look to get long into and towards 2380, 88 or so from the prior day. Okay, so that's the 2388 is this the top of balance here. Okay, that did not happen on the second hypothesis. Let me see. This is really thick. On the second hypothesis, we were looking for a test up early and then look for areas to lean against, look for the drop down into the 2373.74 area, and then look for it to close right up against the point of control being 2380.75. That was the primary idea here. Just look for a push up, a weak push up. Look for the market to lift and struggle on its way up, and an area to lean against. The area I wanted to lean against on that trade was 2383.50, 2384. Look for again, the market lifting the offer but not getting anywhere, and then getting exhausted, then hit the bid, look for the turn, and then look for 2374. So for the key target, and then stand back as the market is likely to pull up to the point of control at the end of the day. Okay, so that's the plan. Here's what actually happened. We get the early push up. So there it is. We get the early push up, but it didn't quite get to 2383, 84. That would have given us a nice clean entry there. The market rotates down to 2374, so it pushes all the way down and almost exactly to where we expected. Remember, 2374 was the target to the downside, and then we get a higher low and we get this corrective move back up. And in the market, where does it close? The point of control right on top of the prior day's the MC point of control, 2380.75, right? And then we get a point of control right on top of it, and then we get also the closing price right on top of where we expected on the bigger profile. So if I go to a 15-minute, you'll see what it did here versus the expectation. Remember, the expectation is to push up to 2384. So rotate down to 2374, 2373, and then finish right in the 2380.75 area. Here's the actual. Did not quite get the push up. It got the push down to 2374 and a quarter, so it missed by a couple ticks. And then we get the point of control staying in line with this MC point of control right here at 2380.75, and we get it closing right on top of that. So Hypo 2 was dead on almost. Just the entry in the morning. I got to tell you, these entries in the mornings have not been as crisp and clear as they normally are, at least for me. The general idea here is that we're looking to fade the early move in line with our overall view, with our plan. Here's the overall week, how we did. So we had a gap zone beneath us. We traded Monday, Tuesday, right here. Hard to see that color. Let's select a different one. So gold is Monday. This purple or whatever this color is Tuesday. And then we get a shift up Wednesday, Thursday, Friday. Friday being down here. So we tested up and it looks like we're not able to continue higher. We still have a gap zone below. This is setting up in the bigger time frame on the weekly time frame. This is setting up to most likely start rotating down. We still have the point of control above us. Here's the point of control for this week. It shifted up from down here. It's above us and it's expected to provide some sort of some measure of resistance. The key figure for the buyers to take over in order to start working their way up the profile is 2384, 2383.50, and so far it's been struggling to do that. This morning, the overall consensus here, the overall um, sentiment, so to speak, this morning is to the sell side, as I talked about earlier, but we opened yesterday's session right at 80 and a quarter, small gap to 80.75, and then we went straight down out of the prior day's range before balancing. We put in a lower low, so there's the impulse, pullback, extension, and now we're looking at a likely correction, a potential correction here back into the range. Today, it is Monday, And today is the position that the market is in makes it a little difficult to get a good prediction on what is more likely to happen over another. So as we look at where we are, so we have a gap all the way down to about 23.67. The most likely scenario this morning is, again, we're looking at the same thing. We're looking at push higher, look for sellers, and then fail back down into 23.6875. Notice the overnight low is right up against this naked point of control from the 27th, which is also a naked closing price. And then we're likely to pull back, close the gap, hold a base, and then pull back into the gap zone, the middle of the gap zone, back up. So if we go, the middle of the gap zone is about 23.74. That's where we're likely to end up. That's hypo 1 for today. I'm looking for, again, initial push higher. I'm going to just sit and watch to see if there's a push higher. If we push higher, then I'm looking at order flow and I'm looking at what we're likely to do on the way up. What kind of struggle do we have up till 23.83? I'm looking for a short, and then I'm looking for a rotation back into the gap zone all the way down to 23.69, and then I'm looking for the market to finish up into the close, but down below the prior day's price action. We have lower highs, here. We're one time framing down on the daily. Okay, so these are all lower highs. We're still one time framing up on the weekly, so we get some um, dissonance there between the weekly and the daily time frame. But so I'm looking for this to be fought both ways. Okay. The secondary hypothesis, if we open and immediately drop, this is likely to be a short trap. Looking for it to push to 23.67 and then find its way back up into the range. So look for a low, a higher low corrective, and then push back up into the close. Same thing as hypo 1. I'm looking for a push back up into the close. Okay. I'll leave you with those two ideas. I'm over my time. Hypo 3 really is looking for a quick test down and an impulse up to target. So actually, let's go hypo 3. Hypo 3 is looking for a quick impulse down, and then I'm looking for it to push back up and get back into balance, get back into the point of control, the prior day's point of control. If we extend this profile out, oops, let's back this mother up. If we extend this profile out, we'll see that we have a fair amount of volume and a very strong point of attraction up here in the 23.8075. So hypo 3 is looking for us to test and reject this gap zone and get back into the point of control. Okay, so that's what I have for you. Again, just it's Monday, lower volatility, lower range. Be patient today. I'll catch you tomorrow. Good luck. Take care.